Let me tell you, it's all been about AI the past 2 days here. It's been about AI, and it's been about tech, and it's been about funding the next big things, and they all seem to have the AI word in. But at the same time, it's about talent, because someone needs to run these tech ventures, and it has been an interesting combination. What's the global view right now on these dynamics and, of course, the flows?
From my place, which is relatively modest because we are a relatively small fund, what we see is that from a assets under management perspective, like VC as a category, it's growing. And if you look at like the numbers, like right now is still like we passed all the different waves from crypto and now AI, and there's still like companies are like funds are raising more funds to invest. However, this is driven by certain mega rounds, which we are very used to now in the headlines, and we see every day. Anthropic, OpenAI, those are driving a majority of those investments. So you have to take these with a pinch of salt, because majority of that trend is driven by these mega rounds and these companies' foundational models, which are really raising funds at a very high valuation.
And Ignacio, since this I think will be very interesting for the discussion, has it got to do that they invested a lot very early and keep raising and in a way, let's say, exchanging, if you will, most of the money? Because it seems that the very top has, let's say, a certain dynamic in the way they exchange capital. One buys from the other, the one sells to the other, and then the hardware comes in the equation. So I think that in some ways you have the main core of the market right now being that very niche, small team of players. And then the question becomes, how do you associate with and how do you innovate along?
There's a lot of cross-pollination between these companies, and then companies investing in each other and deals that are intra-deals almost. But still, like if you look at, if you look at raw numbers and how much assets are under management, I think right now in the VC category we are over past a historical maximum. So that is undeniable, and that is not related with those intra-deals like Microsoft investing in OpenAI and so on and so forth. What is happening as well is the IPO market, like in the last years, was relatively bad, and so companies were not IPOing, and which means that there's a lot of secondary activity, which is something that is relatively new. And all these companies, they get to IPO, like we are seeing now the case of SpaceX with a $1 trillion valuation, which how do they reach that point is by raising multiple rounds at already what it would be in a normal circumstance. It would be an IPO, because we're talking about like 20, 30, 400, whatever billions. So that is from my perspective at a global level. Like if you look at the VC as a category, you are seeing growth, but driven by mega rounds and big valuations on these companies.
Many claim that, the end of software as an asset class is just around the corner. Remember my words, they are wrong. Okay? The end of software is nowhere near. Of course, there were some crazy valuations, both in the public and the private markets. One could see price per earnings, like a multiple of 60 or 50. That was insane. And it's being under correction for good reasons. At the same time, I see some amazing companies that they've taken a hit, like they have an ARR, enterprise value per revenues like 2 or 3, which is insane on the opposite side. So I expect that the dust will settle and, reasonable valuations will come again. All that said, it resembles to be very much like 1999, 1998, the web is coming. Those who will not adapt will be out of market pretty soon. Regarding the funds, the mega rounds, I invite you not to pay too much attention to them. Don't, they are very sexy, very glamorous. Don't pay too much attention. There is a lot of FOMO, in my view, from the big funds. And I'm trying to remember, there was a fantastic article, you can Google it, The 4 Laws of Money. One law of money is money likes prestige brands. Another law of money is that money likes to be in good company. So if other amazing funds invest, I want to invest too. And don't get me wrong, I'm an investor myself, money does not like to sink too much. So don't pay too much attention to the mega rounds. In Europe, we are left behind dramatically. That's the ugly truth. If you an objective assessment about Europe is that we we're left behind.
You're ruining Ignacio's, we're coming back.
We will come back because we have the most important factor, which is human capital.
Well, what is happening is you have the talent that Dimitris mentioned, which I think it's everywhere in Europe. Then you need an ecosystem like access to capital. So an ecosystem that really provides capital. So having investors coming to this event and meeting like founders, that puts, because, you know, let's be honest, like we all have limited time and I go to every event every week. So there wasn't any event in Greece a couple of years ago that it was relevant for me to come. So I think like having access to capital is very important. And then the third, for me, important pillar is all the infrastructure, all the government, all the making, and there's a big effort now in Europe to try to streamline how do you create a company, how do you foster innovation and entrepreneurship. Because let's be honest, it's extremely painful when you are like, for example, in the UK, like you set up a company in 30 minutes online and everything is done. You already have a company's house number, you have a bank account.
VC money and capital allocation is flowing to a great extent to whatever includes the word AI. And at the same time, I think that AI and talent need to go together because if people don't use it, they are not so helpful in the production or special cycle of tech and talent and output that we are describing in some ways. So what's happening? Do you think that we are having enough, let's say, diffusion of technology and, let's say, new talent or talent that is AI tech adjusted fast enough? And is the money being invested properly?
When we truly realize how AI can impact our lives, it's been changed in the last 2.5 years, which means that, like, if you're talking about curriculum, you're talking about how do you train the new workforce, is still very much, people are self-learning. And we have to push, we have to create, again, going back to how as an ecosystem we create the resources for people to train themselves and then eventually train them with the tools that they need to be relevant and to be a skilled workforce. I think there has to be way more effort on that front as well, because otherwise we continue to be left out versus other regions. One thing, sorry, that I don't want to forget, but you mentioned, I think it's very important, and it's the difference between some of the founders that we see in other markets, in the US and within Europe. There's some regions, it comes as a cliche, but it's true that in Southern European markets, like, and I'm including Spain, typically we don't see the ambition of like building a very large company. We often find ourselves like talking to founders that they want to create a large company for the Greek market or for the Spanish standards. And that means it's going to be a, $50-60 million valuation company, but it's not the size that a VC is looking for, and it's very far from like what the American counterparts are investing in, like these Sam Altmans or Elon Musk type of people that they are really, really a little bit egomaniac, but they want to kind of like create like these huge companies. And this is something like you typically find in markets, and when there is like founders moving around, for example, in hubs like London, people have a slightly different mentality. They are more keen to, really go big. And we have 3 companies, for example, started in the UK, and both, all the 3 went to the US because they saw that, well, if I build the company that I want, I need to be in the US.
But as an entrepreneur, I'm all into risk-taking. I'll take some risk because of the age group here. Can you raise your hands if you have ever used either Microsoft Excel or Google Worksheet? Okay, many. How many of you have enjoyed seeing a real guru of Excel or Worksheet? Nicole, like you've seen that, right? Is it not insane what they can do? Like, it's insane. Imagine that exactly the same thing happens with the major LLM platforms, being it ChatGPT or Claude or even Mistral or whatever. The difference, the delta in productivity, if you become a real expert user, is more than what words can describe. So Pavlos is absolutely right. We need to invest heavily in mastering this tool. But don't fool yourselves. There is a big risk here that we may become complacent. So listen to me, take my word, keep writing, keep reading books, paper books, keep writing by hand, keep practicing the skills and developing the competencies that define our human nature. If in parallel you manage to become experts in using the tools and you keep growing and developing the competencies and the skills that define our human nature, that will be the new leadership. That will be the new elite.